Good afternoon, everyone. 2 p.m. on Friday, May 31st, 2024. Futures Brizio here. Hope everybody's had a great week. And before we get started, as always, make sure you smash that like button. And if you're just finding the channel for the first time, please subscribe and hit the bell notification so you get notified when I post new content. And which, as I've said a million times, is not regular. And I apologize about that. But again, I'm not here to monetize a YouTube channel or sell courses or anything. I just do my trading, and once in a while I'll make a video with some information that hopefully is helpful. So to that end, today's video is just going to be, again, just about reviewing what I've been using to trade with recently. And it's led to some really good trades the last few days. And so it's kind of what I've standardized on now. And it's basically what you see in front of you here, which is really simple. It's the line chart, which I've made several videos on, and this Heiken Ashi smooth indicator, which I've also made videos on. And I also told you where you can get a copy for free. If you're using MetaTrader, it is on the MQL5, the official MetaTrader marketplace. You can find it both for MT4 and MT5. And if you're interested, you can go and find it. Like I said, it's completely free. Don't pay for this indicator. You can probably find it on other MetaTrader indicator download sites. If you Google search it, I'm sure you'll find it. It's probably the same indicator, but don't pay any money for it because you don't need to, and it's free. Okay. And again, just to review the settings, and again, you have to play around with this based on what you're trading. But I found for at least for the futures that I trade, these are the best settings, which is 7 period smoothing period, and using the EMA setting. You can set the moving average setting to any of the 4 major moving average. I would recommend either exponential or linear weighted. They are pretty much the same. The linear weighted is slightly more noisy, but it's pretty close. But like I said, I just pretty much default it to exponential, and you want to change this. If you're using this indicator, this use better formula, it has either true or false. Make it true. Somehow it changes the calculation, and when you go from true to false, you'll see slight differences, nothing major, but some slight differences, and I think the true size is better. And that's it. And leave the step size at 0, and that's it. Okay? So those are the settings. And basically, all as I'm doing, guys, this is a trend following system. Okay? Like any other trend following system, it's not going to work when the market's moving choppy sideways. Okay? And you have to be very careful with that and make sure you stay out during those times. And unfortunately, sometimes it takes a little while to figure out that a market's moving sideways. But once you do, make sure you stay out until it straightens out. So this is natural gas. And basically what I'm doing, guys, I start on the 1 hour chart. I may take a peek up to the 4 hour just to make sure the trend is the same as the 1 hour, but I'll usually start at the 30-minute to the 1 hour, and I'll just look for these areas. And on this one, I like the 1 hour, because basically what I'm looking for here is, you can see, at least in this downtrend that we've been involved with here since this started back about a week ago, just over a week ago, this downtrend started. Is that whenever the Heiken Ashi smooth turns blue in this downtrend, it's setting you up for a good short trade as soon as you paint a red Heiken Ashi candle. So basically, I'm just looking at this, and I'm just saying, okay, I'm just going to keep an eye. So if you, all along here, if you had gone short here, gone short here, gone short here, gone short even on this one right here, you got this one blue candle, and then we're potentially working on another correction. Obviously, it's Friday now. Nothing's going to happen really today, but certainly this is, to me, is setting up a short scenario for next week. And then if I go down to the 30-minute chart, I have these 2 horizontal lines. These are basically structure areas where I'm saying, okay, if price takes out these areas, potentially there's a trend reversal. This one is very minor, so I'm not really too worried about this one right here. There might be a reaction from it. So this one, and then ultimately on the higher time frame, you know, up here. So I just draw these just to kind of keep me focused on, you know, where there could be either a reaction, not necessarily a reversal, but, you know, some sort of reaction. I may go out to the 4-hour chart and just look at where price, in this case, in this downtrend, may react from. And, you know, I can say, you know, maybe right here. You know, I'm just looking for swing areas where the price, you know, pulled back. You got this area here, and then, you know, maybe down here at this low. Okay. Now, I don't think actually, even though I think price will have a reaction around these levels, I don't think it'll reverse from here, because you can see price came up and then retested this area already. So this is, for you that are SMC traders, this is kind of like a mitigated area already, but it's a short-term profit target if you were looking to go short somewhere from where price is now. These are short-term targets you could look at. Ultimately, though, I think price will get through here, and then this would be more of a longer range target. Okay. But that's how I would use the higher time frame, just to look at the larger levels. So we're back here on the 1 hour. We already looked at this. You know, these are obviously great points. And again, guys, all the Heiken Ashi smooth is, it's basically a moving average. Heiken Ashi candles turned into a moving average. Okay. So it takes Heiken Ashis and it plots it as a moving average. In this case, it's a 7-period EMA. If I took a 7-period EMA, regular moving average, 7-period EMA, and put it on this chart, it would completely overlay with this indicator, okay, because it's the same parameter. The difference is that this shows you, this indicator allows you to see the really excellent points where the market reverses, okay, and you can use that to your advantage when you're looking for places to potentially re-enter, okay. Now, like anything else, it's not going to work all the time. Sometimes you'll get a signal that's a little too early. You'll get in, and depending on your stop loss, you may get stopped out of it. But that's okay. Chances are, unless it's a reversal, you probably were too early, and you'll have another shot at it. Okay? But you can see in this case, all of these would have been decent trades. This one would have been pretty short before it reversed, and this was actually the key to the longer-term trend. But, you know, this was at least an entire session right here where you could have caught this short position before it turned and went back up. So potentially this one could have been, you could have run into a little trouble. But even with this one, even if you had your stop loss in a comfortable place above here, even though it would have come all the way back to your entry, you know, maybe you went into a slight amount of drawdown. If you could have rode this out, you would have caught this huge move to the downside. Okay. But so either way, it's a good signal. All right. So then, you know, what I'll do is, so I'll start, like I said, the 30-minute to the 1 hour, and then I'll just work my way down to try to fine-tune the entry. And, you know, like, for instance, you know, if I wanted to look at entering, say, right over here, so we'll just highlight this area right here, maybe go down to a 15-minute chart, turn off my scroll here. Whoops. Oh, boy. Ugh. Sorry about that, guys. Okay, so here is that area on the 15-minute chart. Okay, and then you can just say, okay, well, I'm going to wait for a break of structure. You can look at our line chart here. You know, as soon as price breaks below here, you know, this is your entry. And the other good thing about going to a shorter time frame is, let's say you miss this entry right here. I'm going to now extend this box all the way down here. We'll go back to the shorter time frame. Let's go down to maybe a 5-minute. All right. Now you can see here on the 5-minute, let's say you miss that initial entry. Well, now you can see other entry areas, right, where price had these little small pullbacks that you can't see on the 15-minute and higher. But there was another entry here. There's another entry here. There was a, you know, and then there was a couple here as the trend died out down here. These wouldn't be as ideal, but they are areas where you can get involved with the trade if you miss the initial entry. Okay. Now, obviously, what you want to be able to do is catch these off the higher time frame, off the 30-minute to 1 hour, because these are going to give you the best risk to reward ratio. And you know, if you're willing to do more than scalp, or if you're willing to day trade or even swing trade, these allow you to hold on to these. But you can drill down to a shorter time frame and find entries within these impulsive moves where you can possibly get involved. But again, that's a little bit of FOMO because you could go down to that short time frame and see an entry, and it could end up just being, the end of a trend, or it's just not a good spot, and you could end up having that reverse on you. So, I would just advise a little bit of patience. Use, the 15-minute, 20-minute, 30-minute, 1 hour, and just look for your entries there. And if you miss it, then just wait for the next pullback, because it will come at some point. Here, even on the 30-minute, this is a valid entry point right here, and you would have caught this big move down, okay? And this, this went on for 50 bars, so this is like more than 2 days you could have held this trade. So this would have been a swing trade, right? Two days down to this low, okay? All right, so that's natural gas. And then, so this is a new one that I'm just tracking a little bit. It moves very slow, but one thing I have noticed about it is that it's very good at showing structure levels. And this is the 5-year U.S. Treasury Notes. So it's a futures contract. This is the September contract. And again, you go out to the higher time frame. Now this is the July contract, so it looks a little funky because we don't have a lot of price history since this is the front contract now, because I think June expired today, the June contract, and this only does every 3 months. So there's no like July or August contract. And but basically, we had this last move down, created this new low here, and then we had this pullback and heading towards this area here. Now I traded the correction, part of this correction, to the upside today, and let me see if it shows the trade history. Yeah, so this is where I got involved with it today. I've never traded this before, so and I just started following this chart, so obviously I wasn't watching it when it started all this down here. But I saw this correction yesterday, and I said, you know what, it's probably heading back towards this previous high before potentially resuming the downtrend. And so I said I might want to try to take a piece out of this correction. So I did, and you can see where I got in, where I got out at the top here. And now, of course, the market's pretty quiet. Now this might keep going up. We still have quite a long ways till we get back up near this previous high. But I'm out for today anyways. And I don't know if I'll trade, even if it looks like it's going higher next week. I'm not sure I'll trade it. I may just wait, let this play out back up here, and then see if we get a resumption of the downtrend, which would be a much better risk to reward ratio, because again, if we go out to the higher time frame, if this turns out to be a correction, then we've got all this downside here to potentially go and make a new low, at least back to these lows back here. And so this has better potential than trying to maybe take a little piece out here as it heads back here. Now if it blasts through here and we get a retest and then higher, then we could be looking at a reversal. But at the moment, I still consider this to be in a downtrend, with this being kind of the line in the sand area, which was the swing before the last major low was put in, which was down here. Okay. But one thing I wanted to point out with this is that it holds structure level very well. If you look at like on a 15-minute time frame, or really anything above the 1 minute, if you look at the line chart, it shows structure levels really well. Okay. And so that's why another thing that kind of attracted me to it. The other thing, it moves very slow. You could have a candle that doesn't really do too much, and then all of a sudden it'll start moving. So it doesn't move particularly fast, which is kind of good if you're just trying to get a flavor for it and you're not sure if you want to jump in. It doesn't tend to like just all of a sudden start flying the way some other assets do. So it really is good at structure level, and it also, like I said, moves pretty methodically too. And again, like see this back here, this is a chop area. So this is, again, an area where maybe this particular strategy wouldn't work very well. Maybe you would have caught this little piece right here, but then you went sideways. So if you try to take shorts like here or right here or right here, you see, you would have, these either wouldn't have worked out, or you would have had drawdown. Now eventually we had a liquidity sweep here, and then we made this new low. If I turn the candlesticks on, You can see this. That's why this line is up here, because I turn on the candles and I put these lines at the wicks, not at the closing price. And you can see we went up, swept liquidity, and then we made this big low. Okay, but this is an area again where perhaps you would have had some chopping. But at the same time though, if you had a properly placed stop loss, maybe you would have rode this out. But you can see, what they did is the big traders went up, took out all these highs right here. There was a lot of stop losses sitting just above here, and they came up, pushed right through it, took out all the stops, sucked in traders to go long, breakout traders that had buy stops sitting here, or buy stops as stop loss orders for people that were short, and then they pushed it down. So that's very classic price manipulation, liquidity, and unfortunately it just happens. So either you would have, maybe gotten chopped around in here a little bit, or maybe you just recognized it and said, what, I'm going to wait and see what happens. Or you have a stop loss with a lot of breathing room and you just give this thing time to work. And, hopefully you would have been able to get in on this eventually, even if you took a loss or two in here. If you had caught this downtrend, you certainly would have, I would think, made up for any loss you took during the choppiness, because the strategy is good. It's just that, trend following strategies of any kind are not going to work well in sideways markets. They're just not designed to. So that's, I wanted to point that out because I know I mentioned earlier about this not working great during chop. And, clearly we had that in here as the market kind of took a pause and then it made its next leg down. Okay, so now we're coming, like I said, we're coming back towards this area now. Today we made a nice run up. We're still pretty far from this high, and then we've pulled back off this high. So the question is now for next week, are we going to get a pullback and then another push back up? Or is this going to be the start of the resumption of the downtrend where price may pull up a little bit, not take out this high, maybe make a lower high and then push its way back down? So that remains to be seen, or do we, come all the way back up here, and then we'll have to see what happens when it gets up to this level here. If it reverses from there or if we break higher. Again, I don't know. I'm not going to try to prejudge it, but I did take a piece of that out of there today. So, all right. And this has a fairly decent amount of liquidity with it, in terms of point value. So, this doesn't look like much of a trade, but, I made a pretty decent amount on it, so I was happy with that. All right. And then NQ. So I took a trade on this today. Got out of it way too early because I wasn't going to be near my computer, and we had news at 8:30 this morning. We had PCE, which is like a consumer consumption type inflation forecast, so you can see I've taken a bunch of trades, but this is the one I took today. And it was good, but you see price did keep going. It did pull back, so it wasn't a bad trade. I got in again. This was all based on this pullback, and as soon as we got red candles right here, it was a little bit late entry, but I jumped in right here and got out here. So I didn't get out. I said way too early. It wasn't too bad. I did leave a little bit on the table, but it wasn't ugly. And now price is pulling back again. Obviously, the end of the day today, I'm not going to be taking any more trades, but I will look, potentially into next week to see, again, price pull back, get some blue candles, pulling back here, and then maybe look for another shorting opportunity. And I do think this has quite a bit of ways going out to the 4-hour to look for downside targets. Again, just looking at areas where the market paused and we see some red candles. On the 4-hour, we have this area here, maybe a shorter term target. And then we start to have ones that are much further away, like down here and below. So I do think there's definitely room for this market to, again, pull back, paint some blue candles, maybe on the 30-minute chart here, and then look for potential re-entries back down at least towards this area. All right. Gold. I really have a love-hate relationship with gold, I got to tell you. I did take a loss. I had gone long here, thinking after the PCE number we'd get a push up on gold, but I Should have listened to myself because we were in a downtrend. But you can see gold has just a lot of volatility. Now, when it actually starts flying, it's great. But during corrective phases, it's very hard to trade gold because it's going to give you a lot of false entries and false moves. But it finally did start to move down today. I did take a short. I got out, I think, back here. So, again, I left a little bit on the table, but it's Friday, and I was happy with that. But, I really debate whether I want to continue to trade gold. In hindsight, when these things move, it looks really great in hindsight. But in real time, it's just something about it. I don't know. I think because it's such a retail traded market that it's just so very heavily manipulated. It's a lot like it's like the euro dollar of the forex market. It's like the euro dollar of the futures market. So that's gold continuing its downtrend. You can see I have these lines. These are just a few areas of interest as price makes its way down where either we get which we probably will get a reaction. It doesn't mean a reversal, but a reaction. And there's one coming up here very shortly, and then there's these couple more levels down here. Now, if we get through all this, then obviously there's a huge run to the downside. But this is going to be really interesting to watch as it comes into these levels, what it does. And this will probably happen pretty early next week. Monday, Tuesday, we'll know what this is going to do once it gets here. And then, in terms of a reversal point, where price could potentially reverse and go higher. If that's the case, then certainly we can clearly see these two levels here as being areas to watch if price gets through here to go higher. But if this area holds, even if price pulls back into it, then certainly I think it'll make a run lower. So, all right, and then finally, copper. I did not trade copper today. You can see it didn't really do much. This is the hourly chart right here. It did work its way a little bit lower, but it really wasn't very impressive. I didn't really see much this morning, so I didn't trade it. I really didn't even look at it. I do have this area here where, I had put this purple line on the chart yesterday, and clearly prices had a reaction. And it's just looking left, seeing that this previous resistance area is now acting as support. I don't know if that ultimately will hold. I think there's more chance we see price come back like to these levels down here or potentially lower. But you can see previous entry on copper here on the lower time frames. This was obviously the best entry. And again, this is an example where, you got a good entry signal, but price didn't go very far. We had an entry here, we had another one here, then we had a signal here. That was nothing. This was nothing. So this is maybe where you have to look at like market structure levels on a shorter time frame to decide whether these are worth trading or not. If we look at this area, go to the 15. We did break some structure. This, you could have traded this. This is not a huge move, but there is a little down move here. It wasn't very long-lived, and you would have been very quickly giving back your profits. And then, there was another little move here. You could have actually rode this one out, down, a little pullback, and then back down. Did make a new low here. And then we had this one, which didn't go anywhere, and then, it rallied back. And then we had this little one, we had these all in here. So this one's a little bit more tricky. That's why, I tend to like to use copper on like a 30-minute chart and look for bigger structure breaks, just so I don't get pulled into these little gotcha areas here. One thing I'm experimenting with copper is to change the length of the moving average so that it's not quite as sensitive through these areas, but I don't think I'm going to be able to find an area here that's really, if I lengthen this out too much, then I'm going to miss entries that are valid. So I'm probably just going to leave it, and maybe I go to a little bit higher time frame and look for those entries, for the setups that way. Obviously, this was the best one right here, but copper is a little bit more tricky in terms of these entries. So ideally, if you really wanted to wait, you go to a 4-hour chart. You can see on this 4-hour chart there was no entry here, As soon as you get a blue candle on this downtrend, you would have been out. You can see there was no blue candles or entry here that I had drawn on the shorter time frame. Price rallied up, and then we finally got a red candle right here, and so this would have been your re-entry all the way back down. So that might be an option with copper, that hey, I'm just only going to trade this one off the 4-hour time frame. I'm going to wait for these pullbacks, and I may have to wait several days for these pullbacks to play out, but eventually the signal is reliable. So you can see it came up here, and if we blow this up, as soon as you get this first red candle right here on the Heiken Ashi, that would have been your short entry. It would have been perfectly fine to take it right there, stop above the swing, and then you rode it all the way down into where it is right now. And this is a pretty good trade. This went on for 14 4-hour candles, so that's a couple of that's 6 over 2 days, and a lot of points. So this would have been a really nice trade back down, okay? And really, you could still be in this trade until you get a blue candle. So if you were in this short on the 4-hour, you just hold on to this until you see a blue candle. As soon as you see a blue candle, you exit. That closes. Even if it's a little doji, doesn't matter, just close it. That just means you're probably heading towards a pullback at the very least. And so that's what we had here, okay? So that's what I'm experimenting with copper. It's a little bit more volatile with the Heiken Ashi, so I think using the higher time frame might be the way to go, and not touch the settings of the indicator at all. So, but the rest of these I think can definitely be done using the the 1 hour or 30-minute as your analysis time frame, and just using the 4-hour to set your longer term areas of interest, either for profit taking or just being careful as it runs into a particular area or what have you. So that's it. All right, so that's the analysis, guys. It was a good last few days, to be honest, but I did want to bring this to you. Again, this is not going to be for everybody. Look, you have to trade the way you want. This is just another thing, but I'm a very visual person. I really like this Heiken Ashi smooth indicator. It's not the be all end all, but it takes the best of Heiken Ashi and the best of moving average, and gives you a nice real visual of the market and price action, without taking away what's actually happening, where I can either turn on the candlesticks or turn on the line chart and see what the actual price is doing underneath of it, and not relying just on the indicator, but actually seeing what price is doing. The line chart just makes things clean, and then when I need to see wicks or what have you, I'll just put up the candles temporarily. All right, guys, so I'm going to leave it there. Have a great weekend. Questions, comments, leave them down below. Again, smash the like button and subscribe to the channel, and we'll talk to you next week. Thanks.